Investment company Blackstone reported third quarter earnings today. Shares are down about 4% last I looked. Let's break it down with Ken Leon, analyst, global director of research at CFRA. Thanks for joining us today.
Great to be here.
So Blackstone benefits from lower lending rates, but it's also a drag to them. So how did this play out for earnings for the company?
Well, I think performance was great. It was an earnings beat. Certainly, when you look at the flywheel for alternative asset managers, had very strong fundraising. They had very good deployments. And importantly, really since June, we've seen a very good, healthy exit ramp to monetize its private equity companies owned. So I think when we look at the share price, it has less to do with performance. And by the way, private credit was also very rock solid. No really situations of loan risk. I just think the market is much more risk off right now. And Blackstone, of course, represents a less liquid type of company than a public mutual fund. But they're doing everything at a high level. And, I think when you look at all the different business segments, private equity, credit, and insurance, infrastructure, the investment in digital, and also what we've seen in their ability to do this on a global basis, this is definitely a buying opportunity.
Okay, so they've done well in the infrastructure side of the firm. What's working for them there?
I think it's the appetite. It has kind of shifted from renewable energy to fossil fuel, but it's also the opportunities in infrastructure for data centers is a big part of that, as well as ports. And, it's one that not only Blackstone, but also Brookfield are market leaders. And there's demand everywhere.
You touched on this, but if you can expand, I'm wondering if concerns in the U.S. about subprime lending spread to BlackRock.
I don't think so. Even I cover the large banks, and even when we heard from the regional banks, it might have been kind of a one-off, but subprime really gets to an area like either mortgages or consumer finance. That's really not Blackstone's domain. They also have the future growth opportunity with changes in the law in the U.S. for 401k retirement plans and the wealth channel. They have the penetration there from firms like Blackstone is very small, so the opportunity is large.
So, Ken, if interest rates continue to go down as they are expected to do, how would this impact Blackstone?
Well, Blackstone really, when you look at private credit, it tends to be more floating rate based versus fixed rate. So there's also not the problem that the regional banks have, where you have a misalignment on the duration of assets and liabilities, deposits and loans. Blackstone and some of its peers, like Apollo or Ares, are matching up very well, in terms of what they're doing on direct loans or asset-backed securities.
Okay, so you have a strong buy rating. It's at 155 today. You are saying to people, buy on the dip if you can. Your rating takes it to $210. Can you walk us through your math here?
Yeah. So we raised our earnings estimate for 2025 to 540. It's about the consensus. Next year, just above at 670. When we look at our target price, it's on a forward multiple of 31 times. That's below the 10-year historic average of 38. What we see often with these type of firms is when the public equity market gets to be a little bit more cautious. Stocks like Blackstone do pull back, but should we have a pivot, and we're positive, we have an overweight on the financial sector, and we're seeing the equity market going up by year end. Blackstone probably is going to be a good opportunity. So this is an enhanced buying opportunity.
How does it do in comparison to its competitors?
Blackstone is the largest. So in terms of the ability for it to capture one category, because it's so well diversified across the different asset classes that it can invest. I think the one factor that I like about Blackstone being a strong buy, where many of the others I have are buys, is that it is a constituent in the S&P 500 as well. So Blackstone is going to be a much more recognized name, one where probably maybe less concern of any kind of hidden black swan event that might be on some of the smaller old firms.
All right, Ken Leon, I'm going to leave it there. So thanks for your time. Ken's Analyst Global Director of Research at CFRA.